Good morning, everyone. Welcome to Unique Group presentation on whole life, the key benefits, and paid up, limited pay, paid up. I'm not going to say additions, but limited pay. So we're going to talk about a whole life. Talking about that, it's guaranteed insurance. We're going to talk about the limited pay part of it, and then we're going to talk about the cash value. Um, and we're going to talk about the key benefits of whole life. So if you find this video beneficial and you like what you heard, just leave a comment below, or you can call me at 828-794-8111 if you have more questions, if you want to sit down and have a consultation. And or if you just don't know which type of products you want to actually utilize. And we can sort that out by sitting down and having a consultation and seeing what your specific needs are. So, without further ado, I'm going to go ahead and get into my presentation. And again, if you find this video beneficial, just please leave a comment, like, or subscribe. Or if you're one of those ones that you heard the video, you saw it, but you just still can't grasp it, feel free to give me a call. So without further ado, I am going to get started with whole life and its benefits. So I'm going to share my screen. Okay. Okay. Understanding whole life insurance, and it's created by me. Whole life insurance provide permanent coverage that lasts your entire life while building cash value. Unlike other policies, your premiums remain level throughout your life. So it is permanent coverage and it lasts your entire life. And your premiums do not change. Level means that it stays consistent throughout. Okay. The key benefits of whole life insurance, you have guaranteed death benefit, fixed premiums, cash value growth, and potential dividends. And I forgot to mention, after this presentation, I'm going to show you what the illustration looks like for, the limited pay side of it. And then if you just don't want limited pay, then just like the basic side of it. So guaranteed death benefit, your beneficiaries receive a fixed payout regardless of when you pass away. They'll get the death benefit tax-free. Fixed premiums, your payment amount never increases, providing budget certainty. So with fixed premiums, as I mentioned before, it's level. So if you're paying $80 a month for this premium for $100,000 face amount, that's what it will be throughout. Cash value growth, your policy accumulates value over time on a tax deferred basis. So your policy grows and is tax deferred. Your policy accumulates a value over time on a tax deferred basis. So yeah. Potential dividends. Mutual insurance companies may pay dividends to policyholders. Now, depending on the company, now this company that I'm going to show you, which is National Life Group, they do pay dividends. But again, as it says, mutual insurance companies may pay a dividend to policyholders. So not all of them pay dividends. Not all of them pay dividends, and some of them do. Cash value, a living benefit. And I like that living benefit because a lot of us were brought up to think that insurance was only made or was only, for people for death. But they've come up with a new way to do this thing now. You can actually purchase life insurance for living benefits. So these are the living benefits of the cash value part of the whole life. So you have the tax advantages, you have retirement income, emergency access, and guaranteed growth. So the tax advantages, growth occurs tax deferred. Cash value grows tax deferred. retirement income, supplement retirement through withdrawals, emergency access, borrow against your policy when needed. So you can borrow against your policy when needed without being taxed. And then guaranteed growth, value increase at a minimum rate. So that is guaranteed. This is guaranteed. So we're going to talk about whole life versus term life insurance. So feature whole life, the duration, lifetime, throughout your whole life. Premiums are level, never change, consistent. Cash value, yes, you get it, it accumulates cash value. Cost is higher with permanent life insurance, whole life. Features for term life. A specific period of time. We talked about that on the last presentation video that I did. Initially lower, may increase. Premiums are low, but may increase. No cash value. This is pure insurance. Specific period of time. Cost is lower. The cost is lower. Key difference. Cash value, no cash value. Level premiums, initially lower, may increase depending on the term. Lifetime, specific period term, for specific term or a specific period of time. Cost is higher with whole life, cost is lower with term. So those are your differences. Who should consider whole life insurance? I want you to think about this question. Who should consider whole life insurance? So number one, estate planners. Provides liquidity for estate taxes and creates inheritance. Number two, those with lifelong dependents, ensures permanent financial support for special needs dependents. Disciplined savers creates a forced saving mechanism with guaranteed growth. Business owners facilitates business successions, planning, and key persons protection. So who should consider whole life insurance? Estate planners, those with lifelong dependents, disciplined savers, and business owners. We're going to talk about the limited pay whole life. And this is what I'm going to actually show you guys on the illustration. So understand limited pay, choose your timeline, enjoy lifetime coverage, watch values grow. So understand limited pay. You want to pay premiums for a set period, whole coverage, while coverage lasts your whole life. So you're going to pay premiums. If you choose a 10-year pay, you're going to pay premiums up to 10 years. And once that is done, you're finished, but cash values still grow and you still have coverage your whole life. Choose your timeline, select from 10 pay, 20 pay, or paid up at 65 options. So you can choose from that. Enjoy lifetime coverage. Once paid up, maintain protection without additional premiums. So maintain protection without additional premiums. You won't have to pay anymore. And watch values grow. Cash values continue to increase even after payments end. So I'm going to show you how this part works of it, the limited pay part, on the illustration that I'm going to use. And so this will be good because when you sit down for a consultation and you're going over this with your advisor or even me, we're going to sit down and talk about what's best for you, what meets your needs. Comparing limited pay options. So we're going to compare them. So a 10 pay option, higher premiums, and you will see this in the illustration, amounts for 10 years only. Faster cash value accumulation, ideal for those with current high income, complete financial obligations quickly. So with the 10 pay option, you have higher premium amounts for 10 years, fastest cash value accumulation, ideal for those with current high income and complete financial obligations quickly. 20 pay option, moderate premiums for 20 years, balanced approach to payment timeline, good for mid-career professionals, more affordable than 10 pay. 10 pay is going to be your highest. Then paid up at 65. Payments time to stop at 65, retirement. So payments time to stop at retirement aligns with retirement planning. Durations vary based on current age and no premiums during retirement years. So you have 10 pay, 20 pay, and paid up at 65. Question is whole life right for you? Think about that question. Is whole life right for you? Access your needs. Determine if you need lifelong coverage and cash value benefits. Consider your budget. Evaluate if higher premiums fit your financial situations. Examine limited pay options. Choose payment duration that aligns with your financial goals. And consult a professional. Get personalized advice from a qualified financial advisor. So we're going to, I want you guys to think about that question, is whole life right for you? Because this is something that you just don't want to jump into. You want to base this off of your needs. What do you need? What do you have going on? Where do you see yourself going in the future? It's the best way that I can explain it. And then if you're looking at the limited pay, you want to also consider your budget. What can you pay? If I'm only going to be paying for 10 years, expect the premiums to be higher. Do you have enough to be able to move forward with that one plan? Or if it's a 20-year pay, which not going to be as it's not going to be as higher or high as a 10 pay, but it still will be a little bit costly or whatever, and then so forth and so forth. So think about that. So I'm going to stop sharing my screen, and we're going to go over to the National Life Group illustration. Okay. I'm going to show you I'm going to just do a 20-year-old. So let's see. Okay. So we're in here. We're going to go to the illustration part of it. I'm going to click Total Secure. So we're going to go over here to client information, and my client is a male, and we're going to do a 20-year-old. And we're just going to start out with just straight whole life. We're not going to do the limited pay yet. Okay, we're going to leave the death benefit at $100,000. We're going to leave it at $100,000. We're going to change the modium to monthly. And we're just going to let the computer run the systems. We're not going to change any of this, and we're just going to let it run to maturity. So the riders are already embedded in here. You have your terminal illness, your your chronic illness, critical illness, and critical injury, and ABR, Alzheimer's disease. So all these are already embedded in this for you. So with this policy for a 20-year-old at $100,000 face amount, monthly premiums will be $65.38. Year one for age 20, they would have paid a premium outlay of $785. Here's your dividends, annual dividends. They will get $10 by the end on this year one, year two, $18, 3, 4. So here are your dividends. So this company does pay dividends. And then over here is your cash value, and then your death benefit over here. This will be associated with like the cost of insurance and so forth. Okay, so we're going to see what it would look like if we did a 20-year-old. So here it is, limited pay. This is what we was just talking about. So we're going to do paid up. Okay. And then we're going to do 10 years. We're going to do 10 years, and then this is what this will look like. So this will be paid off in by age 30, but look at the cost, almost $200 monthly, but this premium will be paid up in 10 years. So this is something that we will have to consider. Notice that they said the cash value grows aggressively. It does, grows more rapidly when you do 10-year limited pay. So this policy will be paid up in 10 years, but of course the premiums is almost $200 a month and everything. Your death benefit is here. Once this is paid up, you still have coverage. Cash value still continues to grow. Still continues to grow. By age 65, this person will have had 81,000 in his cash value. Okay. Now let's go to and then I'm gonna do a 30-year-old for this too. Just kind of give you an idea what's going on. So let's go to death benefit, and we're gonna say, what if they wanted it to be 20 years? They want to pay it up in 20 years. So quick view. 114, so a lot more cheaper, but it's still costly, a lot more cheaper, 114, but this policy will be paid up in year 20, and cash value still grows. So they will be paid up at age 39. They're 20 now, so they be paid up, age 40. Yeah, be paid up at age 40. And then they will just be protected. And cash value grows. Yep. So that's what it will look like for a 30-year-old. And let's see, 20 years, and then we have 30 years. And this actually will be a little bit cheaper because we're still going 30 years out. Quick view, this policy will be paid up $89.18. That's not bad, but it will be paid up at age 49. So now the older you get, let's do a 40-year-old. Actually, let's just play around with the death benefit. Let me show you what it looked like with the death benefit. So let's change this to 250 and see the difference. So we're going to change this to 250. So keep in mind, older you are, the more the death benefit, and if you're going to do a limited pay, you will see. So we're going to see what it looks like. Okay, so we're just going to see what it looks like just on the basics for a 20-year-old, $250,000. Look at this. Face amount 250, monthly modem premium is 156 here. So keep in mind, whole life insurance is more expensive. It is very expensive. So just keep that in mind. So we're year one in dividends. You get more dividends too, annual dividends. Okay. And then here's your cash value over here. And this is like the cost of insurance and all that stuff. And then here's your death benefit here. So this is what they will be paying, 156. Now this is just no limited pay if they just run it all the way through age 100. 99. Yeah, 100. So let's see what this would look like if this person decides that they want to only just pay for 10 years. So we're just going to see. We're going to change that. We're going to come over here. We're going to do limited pay, paid up. And we're going to do 10 years. And Whoa, look at this. It doubled. 480 dollars and 10 cents. But this policy, if they can't afford to do this, will be paid up in 10 years. They don't have to worry about no more premium payments. But look at the cash value, how the cash value grows. At age 40, they will have $85,000. Age 50, they will have $122,000 in cash value. Death benefit also goes up as well. So, and this is all, they have insurance continue to be covered, but the policy will be paid up in 10 years with a modem premium of $480.10 a month. Look at the dividend options. Look at year 3 at age 22, how much dividends they occur in each year. So, and then we'll try, let's see what it looks like at 20 years. Whoa. So half that, 280, 31. Dividends are still doing pretty good. This is what you would get annually. Here's your cash value. So if you do the limited pay, your cash value tends to grow faster and everything. So, and then your death benefits. So I just kind of wanted you guys to see how this works. So if you, and keep in mind, this death benefit increased because this increased, the monthly payments increased. And because of that, we changed it to, they only wanted to pay for a certain amount of time and then be paid up. So we changed it. We tried the 10-year and then we did the 20-year. And so that's the big difference. But keep in mind that permanent insurance is more costly than your term policies. Stop sharing my screen. It's more cost effective than term policies. So this is why I say it's best that you sit down and you consult with an advisor or your agent, whatever you want to call them, and find out what your specific needs are. What are you working towards, if that makes sense? Is it retirement? Is it, you know, you just have to see what fits you, what best fits you. If you're one of those ones that have all this extra money and you want to do a whole life policy and everything, and you want your policy paid off in a certain amount of time, if you can pay, now you see what it was like for a 20-year-old with a $250,000 policy. And if they did 10 pay, a limited pay, 10 years where they just pay and then it be paid off at 10 in 10 years. But look at the modem premium, $480. If you can afford that, and if that's what you want to do it if it makes sense. But if it don't make sense, don't do it. We're going to talk about IULs, and we're going to talk about now with the limited pay for whole life. With the limited pay, the cash value did kind of grow aggressively, but we're going to talk about something more prone to where, we're going to talk about IULs. And if you are one of those persons that is just focusing on cash value, you want your cash value to grow, 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 please be on the next, please watch the next video, because I'm going to talk about the IUL and the potential growth, the indices that it has, indexes. And if you're one of those ones that don't really care about the death benefit, but want to maximize your cash value, then you need to tune in to the next video, because I'm going to show you if I'm going to show you what it will look like if you want to just maximize your cash value with a lower death benefit. And a lot of investors utilize this because they can really get somewhere with this, if that makes sense. So I want to thank you guys for tuning in. If you found this video beneficial, and if Whole Life is for you, please reach out to me, and you still need, you just want that consultation, reach out to me. My number again is 828-794-8111, and I would love to help you, sit down and talk to you, and we can figure out your specific needs. You guys enjoy your day. Thank you for joining Unique Group Presentation on Whole Life. Bye for now.